This is the Leadership in Insurance podcast, brought to you by FinPro Search Partners.
Insurance companies are businesses and they need to look for the long term and be sustainable.
We went from 0 to 1 and now it's going from 1 to 100.
Insurance as a concept, as a kind of service, is brilliant. The execution is what we're looking at now.
I think the companies that are going to succeed are the ones that are going to understand and master the art of intent.
When we talk about innovation, we lean too heavily to think about technology and we don't think about creating a culture of innovation.
I think innovation is essentially continuous improvement of existing processes and platforms and product.
Right? It's got to be easy. It's got to be seamless.
Hello and welcome to the Leadership in Insurance podcast. I'm your host, Alex Bond, and I've got an unusual one today. I'm very excited about this because this is a part of a very well-known business that I did not know existed. So I'm lucky today to have Gráinne Murphy from Swiss Re, Risk Data Solutions and Behavioural Science. That's a hell of a title. Gráinne, how are you?
I'm good, thanks. How are you?
I'm very well, very well. And I sound like a fake podcast host when I sound excited because I must admit, my friends do point out that I say I'm very lucky. I always think I'm lucky to have anyone on the podcast. But I do think what you do is really interesting, and I don't know if enough people are aware of it. So going to have a good conversation. So it'd be great if you could introduce yourself and, of course, the Risk Data Solutions part of the Swiss Re group.
Great, yeah, thanks. So I'm Gráinne Murphy. So I'm a behavioural economics consultant in Swiss Re's Risk Data Solutions division. So the Risk Data Solutions division sits alongside Swiss Re's core reinsurance business, which is where I think most people will know Swiss Re from. And it really exists to kind of bring Swiss Re's expertise and know-how to the market, so that insurers and corporates can access that insight and data beyond traditional risk transfer. So you don't necessarily need to be a reinsurance client of Swiss Re to benefit from Swiss Re's expertise. So we have two core kind of areas where we provide solutions. We have our data assets, which is where a lot of companies might be familiar with CatNet. That's our flagship product. But the other half is our consulting and advisory arm, which is where the behavioural economics practice sits. So we basically take Swiss Re's behavioural science expertise and know-how and years of trials and expertise in that, and again bring it to businesses. So let me just start by very briefly explaining what behavioural science is, because I'm quite conscious that a lot of people might not know what we're talking about.
Yes.
So behavioural science is basically the study of how people behave and make decisions. And that might sound very simple, but it came about as a response to kind of classic economic theory, which assumes that people act in ways that lead to the most optimal outcome. But we know that that's not always the case. You know, people make decisions and they act without the full information. They make decisions which are inconsistent, and they're influenced by, their own personal biases. So behavioural science basically studies how people actually behave and then designs and tests solutions that can counter those behaviours that we see, so that we do lead to the most optimal outcomes. So it started off as a very academic field, and for a long time it stayed within academia and wasn't really applied in industry. And then around about the early 10s, we saw that it started being applied more and more in public policy to begin with, and then it was picked up by certain industries. So around about that time, there was a team of underwriters at Swiss Re who had a background in behavioural science, and they saw an opportunity for us to really start using those tools as a business to improve outcomes for Swiss Re and for our reinsurance clients. So it's really all about, using kind of that behavioural knowledge to enhance the kind of traditional actuarial methods to lead to better outcomes. So Swiss Re, as a reinsurer, has the luxury of having access to a really large amount of policyholder data. So the team were able to kind of spot patterns and inconsistencies in behaviour from that data, and start designing and testing solutions that would lead to better outcomes. So started off in the life and health space, aimed at improving retention in the life and health book, and we saw so much success that we expanded it to other lines of business and also other use cases. So we're using it really in all parts of the insurance value chain now, from kind of claims to sales, retention, and underwriting. So we also use behavioural science at Swiss Re within our own underwriting and actuarial teams to kind of de-bias the decision making that we see there. So yeah, we've been doing behavioural science for a business now for about 13 years. We've run hundreds of trials all around the world, and we have a really good back catalogue now of case studies of what works.
It's super interesting. I find this fascinating. Obviously, it's behavioural science is very prevalent in my world, which is obviously the world of talent, and particularly prevalent in leadership. But it's interesting actually how little uptake. So I worked with a behavioural scientist 10 years ago when I first started my first search firm, and we used to offer this behavioural scientist who'd become a coach. Now, it's a very narrow form of it, and I don't want to distract from what we're going to talk about. What fascinated me is that we ran a search product which we charged the same money, but we offered this individual to make sure that we debiased the interview process, that the onboarding was done well, and sort of de-risked it, and no one took us up on it. No one wanted to work with it. It was fascinating. So it's a very narrow field. But I realise we're very rude. We've introduced Swiss Re and Risk Data Solutions, but we've not really introduced you, because how do you end up in the weird and wonderful world of insurance if you've been presumably studying to a very high level the world of behavioural science? So what's your journey into the market?
Yeah, so actually, it's interesting. So I did an economics degree, and amongst all of the things that you study in economics, I really got fascinated in behavioural economics, because I don't know what it was, whether it's my intuition or my kind of observations of the real world, but I kind of saw pretty quickly that actually, the average person isn't rational and isn't utility maximizing, as you'd call it in economics. So I really found behavioral economics fascinating. And interestingly, some of the earliest use cases for behavioral science in academia are, how do people make decisions under risk and uncertainty? And that's really essential to the insurance industry. And so when I left uni, I started off actually in the world of regulation. So I worked at Ofcom and then more recently the FCA, applying behavioural science in both of those fields. But ultimately, I always wanted to kind of apply it in the world of insurance. And I actually was following the behavioural science work that Swiss Re has been putting out for a long time, since back when I was at uni, and it fascinates me. So when the opportunity came up to join the team, I jumped on it. So yeah, I've been at Swiss Re now for a couple of years, but yeah, previously at the FCA, so doing very similar related stuff, so kind of bring that lens to what I do here as well.
Yeah, awesome. You're one of those unusual people that sort a job out in insurance and proactively rather than falling into it. That's super interesting. So let's get into that then. So we use the term behavioral science and then behavioral economics, but let's talk about behavioral economics in insurance. So it's a term that I think people throw around and not necessarily understand it in the context of insurance. So how do you explain it to clients? And I suppose, like, what problems is it solving that like traditional data and actuarial approaches can't?
Yeah. So I like to think of behavioral economics as another tool that insurers can use to essentially extend and complement their existing kind of traditional methods, whether that be traditional data or data science or traditional kind of marketing or UX UI techniques. And where it really comes into its own is where, a business has maybe tried to pull traditional levers. Say they're trying to increase sales and they've tried lowering the price, or they've tried a new marketing campaign to increase awareness, but they're still not seeing the impact that they want. That might be a sign that there's something deeper going on, and there's more of a behavioural challenge. So that's where behavioural economics, behavioural science can come in as another tool and another lever that businesses can pull. So kind of following on from that, one of the key challenges that it can solve in insurance is the problem of underinsurance and of the protection gap, because insurance is a product that it's very difficult for the average consumer to understand, and it's very difficult for the average consumer to really kind of truly evaluate, what their risk is and what they need. And so that makes it harder, and also makes it kind of more psychologically difficult for customers to pay for insurance. You also see things like people really undervalue future gains relative to present day costs. So they feel the cost of their monthly insurance premiums, but they can't quite appreciate or imagine what the value will be, because the value is so far in the future. And obviously, ideally with an insurance product, you may never really see the value of that, because for you to see the value, something bad will have had to have happened. So it's really good for kind of issues around kind of retail consumers and sales and retention. But the other part that's worth mentioning is, if we think about how behavioral science can extend the kind of traditional actuarial methods, we've seen a lot at Swiss Re where experienced underwriters and actuaries, they're also human. They can also suffer from biases, and those can impact accuracy when it comes to decision making and forecasting. So we've done a lot of work in developing behavioral science tools and frameworks that will debias that forecasting process and decision making. So that's another kind of key area where we see the value in insurance.
Yeah. There's a couple of things that popped up as you were saying this, and maybe no, we're going to talk about customer behavior in a minute. But I was trying to remember that I was going to think about different geographies and different cultures and how that impacts buyer behavior, because I imagine that's quite interesting. But the piece around new technologies and new insurtech. So look, think about an insurtech MGA. Most of those are data-led, tech-led, and the idea being that they have a better understanding of the underlying risk is the premise of almost most of them. I'm ignoring the ones that have got a unique distribution angle. I'm more just talking about people that think they can price and rate risk better. Do any of those reach out and work with you as any of that happened? Could I would assume that's a richness of data that if you were starting a business again, getting better data, getting better insight, and then removing like any bias from your underwriting team. I just wondered if you'd worked with any more sort of startup businesses or parts of the businesses.
At the moment, I would say we've worked with less so with companies like that. What I would say is where behavioral science is kind of most valuable when it comes to underwriting and forecasting is questions which still heavily rely on expert judgment and human decision making. And so where we're seeing advances in terms of the data that's available to model a risk, or the types of modeling techniques that are available, if you can confidently model a risk via data and machines, that's not really where we sit and where we play, but we play in that area where you're still relying on expert judgment. So we're thinking about things like where maybe it's a very new or novel risk where the data just doesn't exist yet, or areas where there is so much kind of volatility and uncertainty that you still rely heavily on expert judgment. And it might be that 50% is modeled with data, but you still need to kind of close that gap, that other 50% with human judgment. So that's really where the kind of debiasing underwriting decision part adds the most value.
It's interesting thinking about it with my talent head on as well, because one of the big challenges in the market is this, exodus of the talent with that knowledge, which is the 50% of those large, complex risks or whatever. And there must be a part to play in the helping the transference of that, because one of the things about the market which is wonderful, particularly in Lloyd's and London Market, is you sit underneath some super experienced technical underwriter and you learn everything, but then you'll also learn all their little quirks and
Yeah,
their sort of inbuilt biases. So I struggle with, I think moving talent along and progressing talent, and that gap is never going to get filled. But then sometimes I meet people in London Market and they'll sort of say something about how they think about their area of risk. And you go, I don't think that's come from a data point. That's come from them
yeah,
working
yeah,
under, ex underwriter for 10 years. And I wonder if some of those things are passed down and never questioned. So,
yeah.
um, is that part of it? People not questioning their decisions as well? Like they just,
Exactly. I think that's a
yeah,
big part of it, and those are exactly the kinds of decisions where behavioral science can be helpful, because yeah, like I similarly speak to a lot of people and think, and if you ask them, well, how did you come to that value, and they're just like, well, just gut feeling, or it's just
yeah,
based on years of experience, and that might be fine and that might be correct, but behavioral science gives you a sort of framework just to challenge that, just
yeah,
to make sure that you're not creeping into an area where you're being influenced by bias. And like you say, if that talent then leaves the market, or you've got people retiring, and they've just passed down, well, I thought it was that because of gut feel or my market experience. It's not really possible to transfer 40 years of market experience into one person. So actually thinking about those decisions, even if they're gut decisions, from a more kind of systematic, structured way, and trying to kind of record as best as possible what's led to those decisions. Not only does it help, I think, with debiasing that decision and kind of creating a bit more of a paper trail for those gut feel decisions, but like you say, it can also help with knowledge transfer in the market and kind of talent progression.
mm. Because gut feels an interesting statement, isn't it? Because it's humans are very good at pattern recognition. It's how we avoid
Mm,
danger, and like, my team was sort of, we talk about, like, I probably pick more winners than my team when we're putting forward like the shortlists. But I've been doing this for 20 years, as opposed to like the rest of my team who've been doing it less time. And the thing is, like, the challenge is, like, how do I codify it? Because it's not gut feel. It's like I'm spotting a pattern here with this person, because and it leans into this conversation. Like, we do these
yeah,
searches, and obviously everyone we find on paper is super niche, so they have to hit all the experience required and all of these things. So academically on paper, they're all very samey.
mm,
But the thing I would say to people is, like, they've got to have that one person that they essentially fall in love with in the process. It's how they feel about it. And that gut feel is the bit that makes that decision about all these kind of very similar candidates. The gut feel is what goes there. But there's an underlying rationale that sometimes isn't even aware. So it's sort of unpicking
yeah.
that. Like, why does that gut feel actually come up? There is criteria that you're probably thinking about, but you probably don't even know or codify yourself.
No, exactly. And I think this really gets to the crux of what behavioral science is, because it is a science at the end of the day.
Yeah.
And people say, it's a soft science because, people, when you hear sort of people talking about gut feel, they're thinking it's a bit wishy-washy. But no, actually, there is a way, and it's not easy, of breaking down that gut feel and, like you say, codifying it. And
Hmm.
if you're very experienced at what you do and your gut feel often leads to success, it's because you've built up those skills and that framework over years. So it's become gut feel, but someone who's new won't have that same gut feel. And that there
Mm.
are we've done a lot of testing in terms of how you could try and codify that knowledge and gut feel so that you can pass it on.
Mhm.
And it's I won't go into it. I mean, I could spend hours talking about that alone. Um, but
Yeah.
there's definitely there's ways you can do it, and I think it's really gets to the crux of why behavioral science is so valuable.
Yeah, yeah. I could get stuck into that for ages as well, particularly because it's in my world. I think it's fascinating.
Yeah.
Let's talk about something you brought up earlier. Was like, one of the challenges, one of the persistent challenges in insurance is getting people to engage with products that
Mm,
is a grudge purchase most of the time. They're putting off, like, life insurance. Obviously, you brought up earlier, which where it started, is a classic example because no one wants to think
yeah.
about that. But what does behavioural science tell us about why that happens, and essentially what can insurers do about that?
Mm, mm. Yeah, so there's quite a few kind of different psychological factors and sort of behavioral biases that creep in when people are thinking about insurance. So one of the ones that we see most commonly is basically over optimism or overconfidence. So they're just thinking, oh, that's not going to happen to me.
Yeah,
So they're really underestimating the risk that something will happen to them. And so that leads to them being underinsured or not getting cover at all. So if we're taking like the kind of life and health example, what really fascinates me is we've done a lot of first-hand research where we speak to customers and kind of understand, why is it that you don't have the cover, or you do have the cover that you do have. Um, and you won't believe, I mean, even I don't believe the amount of people I've spoken to who say things like, well, I've never been seriously ill and I don't think I ever will be seriously ill. And if you with people like that, and it is far more widespread than you'd imagine. There's no benefit really in showing them like the mortality statistics. So if you say like, well, 1 in 2 people will get cancer at some point in their life, they're going to think, well, I'm going to be in that 50% of people that don't ever get it, so I'm going to be fine. So you can't use sort of rational explanation to encourage these people to take out cover. You can, on the flip side of that, have another issue where you have people who they do fully understand the risk. So, for example, most people, I think, believe that they will die at some point, but they don't want to engage with that thought, obviously, because it's not pleasant. No one wants to think about what's going to happen when they die, and so you bury your head in the sand. You put off that decision. Um, so these are a few of the issues that can creep in that kind of stop the engagement. But there are things that we can do that overcome that. So I mentioned that we've done years and years of testing on this at Swiss Re, and we have a really strong back catalogue of what works. One of the things that works the most consistently is that we know that people typically tend to be loss averse. So they're far more willing to spend money to avoid a loss than they would be to, say, gamble some money to win something. So if you think about the kind of like lottery versus insurance trade-off, more people should buy insurance than they would buy a ticket for the lottery. And we can use that information to get more people engaged by sort of reframing the benefits of insurance and the cover that they're getting from a loss perspective rather than what they're going to gain, so that they really see that the risk of not taking it out in a way that makes them feel something and that they can engage with.
yeah. I was only sort of smiling as I was thinking. I was like, I don't think like that, but that's probably why I'm an entrepreneur. So
Well,
gamble,
yeah,
gamble,
if
gamble.
if you speak to people in insurance, they'll say something else. But if you speak to the average person on the street, you'll get a very
Yeah.
different picture.
Oh no, it was less about insurance and more about just like I would rather bet the house on everything, and then I don't worry about loss too much. I just haven't. But then yeah, that's I don't know. It's not going that well. So I wouldn't say it's best, but no, I
There
think
are
that's
always
really interesting.
outliers.
Yeah, well, I mean that's it, and I mentioned it earlier, but I was interested to think about like different countries and cultures because they have
Mm,
people have different relationships. Have
yeah.
you seen any of that work data, whether it's about insurance or not? But like, how much does culture and different, yeah, particularly like different countries in the world or regions and their relationship with these kinds of decisions? I presume it's quite different.
No, it is different. You're absolutely right. And one of the things that's great about working at Swiss Re is that it is a global organisation. We're a global team. So I sit in London and I focus mostly on the UK, Ireland, and the Americas. But our team does work all around the world, and so we're able to collect data and run tests in different regions to see the difference in impacts of certain techniques and certain solutions, and know what works in some regions and what works in others. And you're absolutely right that it's not one size fits all. And I think that's also one of the kind of key elements of behavioral science, is that we never assume that something that will work in one context will work in another context, because it's all about behavior is very context dependent. Even if you take countries out of it, what works to encourage people to take out life insurance won't necessarily work to encourage people to take out home insurance. So everything we do is grounded in research and testing. And I said earlier that this field kind of started in academia and it's now applied in industry, but we're still a very academic team at heart. We do a lot of research and testing. So we won't, when it comes to regional differences, we'll always test first what would work in that region. And we're lucky as well to have colleagues all around the world, so that we can also get support in localizing the recommendations that we're making, because something that I'm also fascinated in, because I actually studied Japanese at uni as well, is that in addition to kind of the cultural differences, you've got differences in language, where if you translate, say, an insurance document that's been written in such a way to encourage customers to engage with it more, if you just directly translate it, it won't necessarily work. You've got to localize these behavioral science nudges. So yeah, it's a really important point.
Yeah, because I was just thinking in my head about just perceptions of like death, to be honest, because we were talking about life insurance. And I was thinking,
Mm,
we typically it's a mournful process in the UK, but then other parts of the world, death is seen as a celebration of life. And I was just
yeah.
thinking what impact that would have on your perception of buying life insurance, for example. Not expecting you to answer, but that's what keyed it off in my head. Because you didn't take it easy at uni, did you? Economics and Japanese.
Yeah, no, there was only two of us graduated in the end. Actually, it was quite funny, but no,
Well,
it was
I mean,
fascinating.
I started off doing economics and then wimped out, and even having an A level in maths, and then was like, no, do you know what? I'll just do business marketing. It's much easier. We're really close to time, and so I was going to ask you about your regulatory background, but I want to jump on to like what's happening now. I think, and
Yeah.
we can't have a podcast without talking about AI. It's not allowed. There's obviously a lot of investment right now in AI tools across the industry.
Mm.
Loads of organisations are finding that adoption's not following, and I wondered about your exposure to that and what role as behavioural science they're playing in getting people to change the way they work as well. Because we can have the data, but if we're not applying it, it's lost. There's a moot point. So yeah, how does that interaction work?
Yeah, so I think behavioral science has a really key role to play, both in terms of supporting adoption of AI tools, but also in the kind of broader behavioral and cultural shift that it's bringing into the workplace.
Yeah.
So Swiss Re is currently in the midst of a really big AI transformation. I think like many companies, but we've actually embedded behavioral science techniques into that AI transformation program, so that the sort of the human element and how the workforce are kind of coming to terms with AI usage has been thought about really from the start. And we've just had some figures coming out in terms of the adoption rates, and we're seeing some really strong uptake. And we're also not only using behavioral science to think about, well, how do you increase adoption, but also how do you improve confidence in AI and appropriate use of AI. So we kind of take the same approach that we take with our clients, in terms of really applying that kind of rigorous academic approach to understanding, well, what are the drivers behind why people don't use AI or are cautious about using AI, and tackle them kind of one by one. So I mean, just briefly, one of the things that we've seen a lot of success at Swiss Re is in deploying a kind of AI champions network, where we have AI champions really at the working level, who share kind of AI tips and tricks, and sort of troubleshoot team members' problems on the ground, so that the AI transformation program isn't only a top down, it isn't only led from the top and sort of we all have a mandate to use AI, but actually it's being built from the ground up as well. So we've seen that being really successful in terms of building a good AI culture and a good. I think that's where we've seen a lot of the benefits in terms of the adoption rates and the usage rates.
Yeah, it's such a pertinent point for me. I mean, I genuinely got a call from a global HR leader from a huge MGA yesterday, and she was saying, "How are you seeing people roll out AI across the business?" Because um, this HR leader was in charge of like AI adoption, then the CTO came
Mm,
in, and now the CTO's running it. And some people are running it from a sort of CTO down, but this is the conversation we were having. It was like, but it becomes a HR L&D element, because if you're not training people and getting them comfortable with it, if you're not essentially making it part of people's roles,
mm,
but also encouraging them to be comfortable and confident in it, then you won't see adoption. So there's no point, the CTO can invest all the money and all the time, but if, just having a tech stack, if it's not being utilized, um, isn't effective.
yeah.
Which, and also we're into this world of I think AI agents are really fascinating, because you really, what you're talking about is, it's not even tech anymore. It's like,
Mm,
I always think about it, it's an automated employee that doesn't need paying and doesn't need to take a break. But
yeah.
if you build those agents and they're built in your image for your team, who manages those people? There's those agents. Yeah, I said people,
Mm.
but who manages those agents when you leave? It's like having a leaderless team and then not replacing that person. So there's all these changes in our behaviour and adoption that is a real current and ongoing challenge, I think.
Yeah, yeah, no, it's really interesting, and we've done a lot of work in terms of like also how people are interacting with AI agents, because like you say, they are essentially an extension of the workforce, and so there is a behavior change element around people thinking about them in that way rather than thinking about them as, a classic tech tool that they could use. So we've done a lot of work around, how do you ensure that people are using, good prompts so they're getting the most out of their agents, but also how do you ensure that they're also critically evaluating what they're saying to them, because we're still obviously not at the point where you can just take everything that the agent is saying at face value. So we've also seen quite a lot of success in kind of using behavioral framing around the output from AI agents,
Mm,
to increase accuracy and increase kind of critical thinking.
hmm Yeah, I mean that's I've been sent many documents to sign, contracts wise. I'm going, this is absolutely just cut straight off
Yeah,
ChatGPT. Or call. Um, we're at time. I could speak about this all day, so I think we might have to get you back on and do something else. And,
love that. Yeah,
I'd love to do that. But thank you so much for being a guest on the Leadership and Insurance podcast.
great. Thank you so much for having me.
Thank you.